Hello guys, welcome to Let's Do Some Trade. I would like to share some basic tips on intraday trading, which is nothing but my personal experience. Hope you will like it. It will be a series of few videos on tips for intraday trading. Before getting into these videos, I would like to first suggest that you first go and watch some basic videos on intraday from the suggested list, which covers basic videos like stock market for beginners, basic technical indicators, best time for intraday trading, trade setup for intraday, etc. So let's begin. Very first thing is oversold, overbought shares are risky. Oversold is a condition when there is more selling in the stock market as compared to buying. Here there are more sellers as compared to buyers. Similarly, overbought is a condition where there are more number of buyers than sellers. To know more about it, kindly watch this video on basic technical indicators to get a basic idea of what oversold or overbought shares are. Oversold and overbought shares are risky. These are unpredictable. Let's look at an example. In this chart, the share is in a smooth downtrend as shown by the red arrow you can see. Observe the RSI indicator below it, which keeps falling as well along with the stock. But as soon as the RSI level hits 20, it becomes an oversold stock and the stock immediately bounces from that point. Which is shown by the green arrow. You can see the stock has bounced from the point where the RSI has become 20. Let's look at another example. Here the stock remains oversold for a long time, but it does not bounce back. So we cannot predict if the current stock will bounce or it will continue to oversold. So it is very unpredictable and risky. So the basic tip for overbought and oversold shares is exit as soon as the stock becomes oversold or overbought, or simply do not enter the stock if it is already oversold or already overbought. Let's see another one. High resistive chart patterns. When the stock doesn't move either up or down for a long time, it generally is a high resistance area. For example, in the below chart, you can see candlestick pattern of 10 minutes time frame is there. Initially it's a very smooth downtrend which is marked by the red arrow. Generally, expectation of a trader is that it will move more down, but the stock does not move in the desired direction for around 1.5 hours, which is shown with the orange arrow. After that, the stock reverses unexpectedly. As you can see, the target is not met, but ultimately the stop loss gets hit over here. Let's see another example. Similarly is the case with this chart. As you can see, it is in the smooth uptrend, which is shown with the green arrow. But after some time, it for around 3 hours, it does not move either up or down. Which, as you can see with the candlesticks, 10 minutes. Each candlestick denotes 10 minutes of time frame. So for around 3 hours, it does not move either up or down, remains stagnant at one position. After that, it does not move up and ultimately goes down against our trend. So the tip for high resistive chart pattern is exit the trade as soon as you find that it is not moving for a long time. Approximately the time would be 1 hour or more than that. If you find that already the stock is in the high resistive area, do not enter the stock. Avoid entering in such stocks. Let's see another one. So targets, this is a very basic question, what the target should be in intraday trading. Generally the expectation is to get maximum profit from the capital which you have invested. For example, if you have invested 10,000 rupees in a trade, you would expect to get around 2,000, 3,000 in a single trade. This is a huge mistake which traders do, and this is the main reason for loss. The big targets are the main reason for loss in intraday trading. Please don't do that. This is the main reason why many are unable to make money in the stock market. if you expect same, you can lose even from your capital invested. 4 to 5 such loss-making trades will wipe out all of your capital, and you would not dare to return to share market ever again. There should be discipline in whatever you do. Try to earn 6 to 10% only from single trade. This is very easy. For example, you are having capital of 10,000 rupees and your trader provides and your broker provides around 20 times of margin. So you can trade for 10,000 times 20, so 2 lakh rupees you can trade for. Suppose now stock XYZ is there, which is having share price of currently rupees 200. So you can buy around 1000 shares from it. Set your target to 0.3% from the current buy price. So for 0.3% of current buy price will be 200.6. So if I have bought 1000 shares for 200 rupees and I sell 1000 shares at 200.6, so my profit would be around 600 or 6%. Similarly, if I place 0.5% of target, my profit would be 1000 rupees or 10% profit. So there has to be a regular churning and regular earning from whatever capital you are investing. Don't place very long targets. Here 0.3% to 0.5% should be your expected target, and once it gets hit, you should exit from the trade. There should be discipline in trading. So tip for targets I would say is keep small and disciplined targets. Small and disciplined, I mean from 0.3% to 0.5% of your current buy price would be enough. It gets multiplied by 20 or the whatever margin provided by your broker, and that gets multiplied in your profit. So if you're setting 0.3% as a target for the stock, it would result in 6% of profit from your invested capital. So thank you guys, that's all for current video. This was a part 1. I'll try to cover more tips and tricks for intraday trading for coming videos in the coming videos. Stay tuned, do watch the videos. Hope you like it, hope you learned something. Let me know in the comments below what you think. Let me know how these tips and tricks are working for you. Do like, comment, share and subscribe to the videos. Thank you, bye bye, and I'll see you next time.